Welcome back. Let's check futures this morning, and we are looking at another day of gains. Dow Industrials right now up 67. The S&P 500's up 6, and the Nasdaq higher by 11 3/4. All three major indices hit record highs yesterday at the close. Markets, of course, rallying on news of a tentative deal between the U.S. and Iran. The Dow was up 24, but look at the Nasdaq. It was up 242 points, about 1%. Vice President J.D. Vance says, don't get too excited yet. The president needs to sign off on any deal. Meanwhile, the market has been in a melt-up since the end of March. Take a look at these numbers. It's March 31. The Dow Industrials up 12%. The Nasdaq up 29.4%. And the S&P 500 up better than 19%. I asked Jamie Dimon about markets, and I sat down with him here at the Reagan Forum, the chairman and CEO of J.P. Morgan. Here's what he said about the state of the economy today. How would you characterize the economy right now? Give us your sense of the macro story.
Well, it's pretty good. The economy is growing at 2%. Unemployment's low, 4.3%. Wages not going up that much anymore. Corporate debt's not that high. Consumer debt's actually not that high. Inflation is ticking up. That's not good. And you have a lot of stimulus. The one big beautiful bill, $300 billion of stimulus. The additional spending AI is $300 billion of stimulus. Dereg, it's a form of good stimulus because it allows people to put their money to work in a better way.
Now, there was a but in that, and I'm going to bring you that but. Here, my full interview with Jamie Dimon all morning long this morning. We will begin the interview in the 7 a.m. hour and then continue it throughout the 8 a.m. hour. But first, let's talk with Lonski Group founder and president, John Lonski. John, good to see you. Thank you so much for being here. Do you agree with Jamie's comments about the economy right now?
Absolutely. And I want to add, even though we had only 1.4% growth in the first quarter, we find that if we just focus on consumer spending and business investment, we are looking at growth of 2.5%. And I believe that 2.5% growth is going to continue into the second quarter. The economy's doing well. It's a situation now we have neither gloom nor boom. We have a healthy rate of growth that is going to allow inflation to return to a downward trend once we have this situation with Iran out of the way.
Yeah, it seems to me, Liz, that the markets are just looking through this spike in inflation.
Absolutely.
There's real confidence here.
The AI story is so powerful. John, what are you looking at in terms of benchmarks to assure yourself that the AI story is on track? I mean, what should we be watching here?
Well, capital spending remains strong. That's obvious because of AI. Profit margins are still on the wide side. Profitability is strong so that these potential customers, business customers of AI will make use of AI, that there's going to be a market for AI once it comes online. I want to add something else, the state of corporate credit. It wasn't that long ago, there was a lot of worry about private credit and so on. Well, private credit is close to high yield credit. And I just noticed that the market's assessment of default risk in the high yield bond market is well under its long-term average. It's the lowest it's been since early February of this year, which, by the way, was well before the start of the conflict with Iran. So from a credit perspective, companies have the money necessary to make good use of what AI will supply.
Yeah, and that's certainly one of the main factors in terms of this huge melt-up. But the Reagan National Economic Forum out with a new survey, which we want to show, and it shows how Americans feel about artificial intelligence. Look at these numbers. 51% say that they're concerned. 24% are optimistic. 25% have no strong feelings one way or the other. On the whole, older Americans have more hang-ups about it than younger Americans. But, John, look, there are serious concerns about agentic AI right now and whether or not we have the right framework in place to ensure that these agents are not going to act unpredictably. What do you think?
I think the onus falls upon those companies that are creating AI. My goodness, they better make sure that they supply an AI product that is safe to use, that it's not going to be very disruptive to the economy. Otherwise, they're going to find themselves in a heap of trouble, especially as far as lawsuits and everything else is concerned. So the shareholders in these companies have to make it clear to management that they do not, that when they put this product on the market, this AI product, that it doesn't wreak havoc with the economy, society, and so on.
Liz, you have thoughts on that, about this agentic AI?
Yeah, I mean, it was interesting to me that the White House, in response to the fact that they have kind of crossed a line, the industry has, in terms of creating something that they're worried about, now we have a White House effort to oversee it. And I'm kind of surprised, John, that the market didn't react to that people weren't saying, oh my gosh, now there's going to be regulation and send these stocks down. But it seems like nothing sends these stocks down, right?
It's true.
I think the market seems to be fairly confident that these companies are going to know well enough that they have to regulate themselves. If they don't do a good job at regulating themselves, then of course the government's going to enter in.
Of course. John, good to see you. Thank you, sir. John Lonski, stay with us. We'll be right back. You're watching Mornings with Maria live from the Reagan National Economic Forum.